Yo, what's going on YouTube? EB Trades over here. Today, October the 22nd. In total, I made around 12,000, but just all in combine money. But I basically passed one account and I passed 5 of them halfway, right? So as you can see, there's 6 accounts. I passed one of them. There's 5 accounts in total, but I passed 6. No, oh my gosh, I can't speak. There's 5 accounts right here, but I actually passed one of them. You can't see it because when an account passes, it takes it off after like 10 minutes. But this is the account over here. I'm just gonna refresh it. I'm just gonna let you guys see that I can activate it if I want to. So boom, activate it if I want to. Right, cool. So I made 1.5k across these 5 accounts, got it halfway up, and then I made around 4.5 over here. So that's around 12k in flipping combine money. So that's cool, right? I took 3 trades today. This is one trade I took on gold, my main trade that got basically all my accounts up like that. And on MNQ, I took 1 trade. I took 2 trades actually, my bad. I took 2 trades, one over here. So let me just go down to, let me just put this back closer over here. Start new, it's right over here. Right. I'm gonna go on to 1 minute. So the first trade I took is this one right over here. I took this one to get my account passed because my account that I passed, I was already 1.5k from yesterday. So today I just have to make 1.5 and then I'll pass it. So I took this trade and I made it. So what made me take this trade? On the 15, I'm coming into the 15 in the morning. 15-minute for value gap right over here at the extreme over here. We have an SMT. We have a 15-minute inverse value gap previous day high, right? So I'm like, okay, if we're gonna be bullish, I have my previous day high over here. If we're gonna be bearish, then I'm gonna see what I'll target. But no, we already had these lows coming in, so I'm like, I'm just gonna target these lows, or I'll target the 15-minute for value gap, right? Cool. So I'm going down on a 1 minute. What do I see? On the 15-minute inverse for value gap, price comes and it touches it, the consequent encroachment, which is a fancy word to basically just tell people the middle of the for value gap. It taps it to the tick. Now, one thing you guys want to know is that whenever price touches key levels to the tick, like highs or previous day low or new daily open gaps, new weekly open gaps, whatever it may be, whenever it touches stuff to the tick, you always want to be aware because that's a possibility for price to want to reverse, right? So when I seen price do that, it tapped it to the tick. I'm already like, okay, price might want to reverse. It taps it to the tick, it starts going down, and it starts having a little displacement downwards, right? So what does it do? It comes down over here. We have this 1 minute inverse value gap right over here. Price comes, makes it for value gap, goes up, boom, closes down over here, comes back, taps it, and then continues to go down. So as soon as it started to go down like that, and on this candle while it was opening, it went straight down, and I'm like, it went back up, closed over here, went over here. I'm like, I'm not even gonna wait for it to close under this 1 minute change in the state, because most likely on the 32nd there's already that I couldn't see it on this one, but I was trading on my top step, but I didn't really care to go on the 32nd. I was like, you know what, I've seen this setup happen a lot, so I'm just gonna take it. So one thing I want you guys to learn from this is whenever you see key levels get tapped to the tick, it can be a fair value gap, right? For example, if I have a fair value gap just right over here and price comes and it taps, say example, this part to the tick, and it starts reversing, and then you see displacement and you see your confluence on top of that, it's a good setup. So it just shows that it really respects it, and price wants to just reverse, right? So boom, that's how I took that trade. Coming in, and I just targeted these lows right over here, and I took my trade. Boom, 1.5. I got my account passed. That's cool. On my second trade, I see that price tapped into the 15-minute for value gap that's at the extreme over here. Price went up, inversed this gap over here, made a 1 minute change in the state. Once price did that, I'm like, okay, cool. Number one, we're already under 8:30 a.m. opening price and 12 a.m. opening price. So okay, this is a really good buy opportunity, right? We're basically at the premium for the discount, my bad, for the day, right? So I'm okay, cool. I took that trade. Price was going up, and then after that, price started to strongly displace downwards. So I'm like, okay, that is not good at all, right? After I seen price do that already by, and I targeted previous day high, like I told you guys. Already as price started to come back down over here, I took out my trade, right? So as I took out my trade, my 150k account, I got in there earlier. And when I got in there earlier, I just kind of took it out the highs because I wasn't confident. I took it out at 1.5. So I had 1.5 off of this trade on NQ, and on these across these 4 accounts, I had like $79 across all 4 accounts, right? So around 290 something. So that's for my trades on NQ, right? Going on gold. So I come on gold and I'm like, you know what? Let me just go back on NQ to explain to you guys why I just switched. So after I did that, I'm like, you know what? Look, I literally my first trade was a sell. My second one was a buy, and then prices started to go back down. And I'm like, look, Nas has been all over the place for me this week. So I'm like, you know what, man? I'm just gonna get off this. The mistake that I did that I should have, the mistake that I didn't do. No, the mistake that I did was to not wait till 950 macro. 950 macro would have presented me with the beautifulest setup. There was S&T on on ES. There's S&T somewhere over here on these highs. If I go on the 2 minute, I'll find on the 2 minute. There's a 2 minute inverse value gap. Price goes down, closes, and after that goes back up, taps into it, respects it. Boom. 2 minute change in the state. Right over here. Macro, S&T, change in the state. Boom. I could have put my stop at this high. I probably put it over here, but it's play safe. I target 15 minute for value gap. Boom, I'm out. Look what price did. That was basically the setup. If I wanted to, I could even have held it till whatever this is. I think this is like what, previous week low or something. I don't know. It's probably just to the sell side, but I could have held it to that. Boom. That would have been the main trade of the day, right? But I traded outside of my macro, which is a mistake that I did. That was a bad thing. So already when I had these two biases, okay, I sold, I bought, I'm like, okay, what am I gonna, I'm like, you know what? I don't want when I'm trading that my old biases, I have attachment to them. So I just want to come in here with a new perspective. So I'm like, you know what, bro? I'm just gonna go on gold and I'm gonna see what gold gives it to me. I'm gonna look at it kind of with a naked eye, right? Not with like an old perspective or old bias or whatever. So I'm gonna just get on gold and look at something new and clean. Cool. And my friends been telling me that gold's been really doing good for them. So I'm like, all right, cool. I'll hop on gold. What do I see? We have SMT over here. We hit this 1 hour for value gap. I don't think we hit it yet. Let me see if we did. No, we didn't hit that yet. So that would have been also one of my my targets since it's a key level. So I would have targeted that. But essentially what ended up happening was that I had SMT over here. It was the macro time. SMT. We have this. I'm on the 12 minute. What the hell? I'm meant to be on the 15. My bad. We have this order block right over here. Price taps into that order block, respects it perfectly, doesn't even close above that contour encroachment. After that, it respects it, comes down. Let's go on the 2 minute. You have SMT, 4 minute inverse value gap. So I'm just going to 4 minute time frame real quick so you guys can see. 4 minute, look, price makes it for value gap, inverts it, comes back up, respects it, boom, respects it, and then displaces from it. On the 2 minute, you have a 2 minute change in the state right over here. There's these two candles right here, changing the state. SMT, liquidity sweep right over here. I forgot to show that to you guys. Liquidity sweep, SMT, inverse value gap, tested and respected. So, say example, right? This could be inverse value gap. Inverse value gap could just be the one over here, right? But the thing is, it has to tap back into it, respect it, come back down. When it does that, that's when you're like, okay, that's really, price is showing us that it really wants to go in that direction that the price got rejected into, right? So, boom. 2 minute change in the state. I had my relative equal lows over here. All these stacked up lows over here. Boom, boom, boom. Also, this is the low over here. So as prices is going up and making high lows, it's literally just stacking. So boom, took this out, took that out, took that out, took that out, took that out. All of these were all under this one. So boom, I put it over there. Price went and hit it, and that was really it. So just to go over the trade, one thing that I really want to just bash into people's heads is you want to trade on your macros. Your macros literally give you the setup. They're 10 minutes before the 10 hour, literally 10 minutes before the 4 hour candle is about to close. And okay, so let me just tell you guys what the macro is. Essentially, let me break it down properly, right? Macro is 10 minutes before the hour closes and 10 minutes after it opens. So you want to do 9:50. It's like basically 9:50 to 10:10. So especially when you do it at 9:50 and 10:10, check it out, right? On the 4 hour, this is how it goes. This candle over here, the 6 hour candle, is from 6 a.m. to 10 p.m. No, 6 a.m. to 10 a.m., right? So not only we're trading the out, like we're trading the one. Okay, I'm gonna try to explain this in the best way. I'm trying to go to the 1 hour. What are you talking about? You trying to tell me 1 hour doesn't exist, bro? What the hell? Hold on. I might just have to edit that part out. Or I might just write that. I don't care. Yes, the 1 hour. Okay, cool. Okay, I'm gonna just put it back. So as I was saying, right, the macro is. So as I was saying, the macro is essentially 10 minutes before an hour is about to close and 10 minutes after it's going to close. So that's the zone that you really want to get into to get a nice trade, right? If you have all these things, SMT, liquidity sweep, 4 minute, well, liquidity sweep happens before, but if you have an SMT that's there, 4 minute inverse value gap change in the state with the SMT liquidity sweep, and it all happens around the same time, boom, take your trade, man. Take your trade. And you have a drawn liquidity, a beautiful drawn liquidity, a bunch of lows stacked up, 1, 2, 3, 4, 5, boom, take your trade. All right, that's what I did. So the macro is really important. That's one thing I want to stress a lot. It's really important. It helps because take it in, right? The macro is really the time. It's 10 minutes before the hour is going to close and 10 minutes after open. So that's really where it's going to build how the hourly candle is going to play out, basically, right? So the thing about the 950 to the 1010 that's really important and essential is that, like, take it in. Not only is it forming the next hourly candle, but when it's 9 to 10, it's also forming the next 4 hour candle. Because check it out. If I go to the 4 hour time frame right over here, right? I get on the time frame, boom. 6 a.m. to 10 a.m., that's already one candle. The next candle is going to be the 10 a.m. to 2 p.m., if I'm not mistaken. Yeah, to 2 p.m. So not only are we building the the 1 hour that's gonna happen right after, so what, the 10-hour candle, but we're also building the 4 hour candle for 10 a.m. to 2 p.m. if that makes sense. I hope you guys caught it, but if you didn't, just, I don't know, reverse the video or something, or go watch a personal video, man. But that's essentially the point of it, of what it does and why it's super essential. Another thing I want to stress out that I already stressed out to you guys before is when things get hit to the tick. So that's really 2 things that I learned today. And as you can see, if I waited for the macro, I would have had the perfect setup. Literally SMT, inverse value gap, tested and respected, change in the state, and yeah, also opening price helps. But no, I wouldn't even say but, it helps. It helps. Just don't really rely on it too heavily. But if you see that, let's say example, you're trying to take a buy and you're at a premium and you see that the 12 a.m. opening price, the midnight opening price, and 8:30 is, if you're buying it, if it's under you, no, if it's above you, it doesn't really make sense because you're technically in a premium in a way, right? You're in a premium. You don't want to do that. So that just really helps to remind you if you're in a premium or in a discount. So I hope you guys enjoy. I think that's really all that I really have to talk about today. I passed these halfway, and I also haven't expressed it. I don't think I'm gonna buy it yet. I'm just gonna try to make these to pass these ones, but I do want to make a challenge where I hit 100 payouts before the month ends. We're October the 22nd, so just stay tuned for that. I want to have 100k in payouts total. Stay tuned for that. Just let me know what type of content you guys want to see, and you guys enjoy, man. Peace.